Let's move on to tax matters now, and the base in South Africa is under growing strain, with fewer taxpayers expected in the years ahead, even as government leans more heavily on personal income tax to fund the fiscus. Now, Tanya Tosen, Tax and Remuneration Specialist at Tax Consulting South Africa, is warning that a shrinking pool of taxpayers, rising emigration and tighter enforcement could be setting the stage for what she terms a tax crunch. And I think that obviously raises difficult questions about who ultimately is going to carry the burden. Tanya, welcome to you. This is a very important and serious issue. Are we not already at the point where too few taxpayers are carrying too much of the country? We've been there for a while, haven't we?
Yes, we have, Jeremy. It's a very valid point, and it just really highlights how much pressure the individual person on the street is under at the moment. I mean, if we look at the projections for this tax year, Treasury is forecasting that they're going to collect 844 billion rand from individual taxpayers, which is way more than VAT, corporate tax, which follow those amounts.
And can you articulate for us then how serious this projected decline is?
Well, if you look at the number of taxpayers year on year that Treasury actually forecasted from 26 to the 27 tax year, there actually seems to be a reduction of 196,721 taxpayers. So that highlights, how critical it is where we are carrying the biggest can and contributing towards taxes, that each taxpayer, each paycheck really counts in South Africa. It's a massive concern.
It is a massive concern. And Tanya, I think what I'm hearing you say, and correct me if I'm wrong, is that emigration is probably the single biggest threat to that tax base right now, or is there more to it?
I think there's a little bit more to it, but yes, definitely. I did a budget speech recently, and if you look at the migration profile report that Statistics SA released recently, more than 1 million taxpayers have left South Africa in the last 20 years. And I think what's more concerning is, it's just not just any taxpayers. It's taxpayers who've got degrees, postgraduate degrees, so very highly technical and skills. And also we're seeing a trend when we look at those immigration stats that even your lower income taxpayers are looking or have left the country. So that trend of people leaving South Africa isn't slowing down. And there have been reports that 50% of these South Africans who've left have no intention of ever returning.
So high income earners, and as you've just told me, beyond that net, are effectively voting with their feet. That has, as you've said, a dire impact consequence for revenue. Yet at the same time, Tanya, there is tighter enforcement from the South African Revenue Service. Do you think SARS at this point is starting to run out of options beyond just squeezing compliance?
Yes, absolutely. And I think they are looking at ways on still drilling down into the individual personal income tax force. That's why we've seen lifestyle audits coming to the forefront. SARS has embarked on that automatic exchange of information recently with the Common Reporting Standards, where, many years ago, Jeremy, you often hear that people have a secret bank account and no one can actually see that. You can generate revenue. You don't have to disclose that growth to SARS and pay tax on, your interest or your investments. But those circles are really tightening because SARS realizes that, the goose that lays the golden egg are the individuals in South Africa.
So Tanya, realistically then, how exposed are individuals under these expanded lifestyle audits? And add to that, there's a lot more sharing of global data, isn't there?
Yes. Absolutely. So recently, SARS did also launch, as well of, there's been a lot of media that the lifestyle audit powers are expanded to at least 14 government bodies, including the Financial Intelligence Center. So what is very crucial to understand here is that it's not just SARS out there scrutinizing your social networks, what you post on Facebook. You've got these other government enforcement agencies also looking at whether your your lifestyle matches what you are disclosing to SARS.
Which then begs the question, at what point, or again, are we already there, does that type of enforcement start damaging economic activity rather than supporting it?
Absolutely. I mean, Jeremy, I think it's also one area which could really chase possibly certain income generators out of the country. Look, I think SARS is also putting a very hard line down on enforcement, on compliance, and really there is nowhere else to hide. So, when I speak to organizations, when I do my tax training, I really say it's the one area that people really should ensure absolute compliance because, tax liabilities never prescribe. They can go as far back as they want to. And it's a dangerous game. But at the end of the day, it's the only place where they generate revenue.
So in order to try and squeeze more blood from that stone, Tanya, we know there's been a lot of talk about a wealth tax. Is that a realistic option? It might be politically attractive in the short term, but again, from what I've heard you tell me, it is economically very risky.
Absolutely. And it was interesting when we did our recent budget speech to actually see, with the audience, with all these payroll financial professionals who attended our webinar, did they think wealth tax is going to be enforced? And it's a very valid question because there aren't many options left on the table. I'm sure you've heard that they're looking at investigating gambling tax, other areas as well, but it's yet to be seen how far will they take this. Luckily, we did get a little bit of tax relief on our tax tables this year with inflation of 3.4%. But that was also because there was an over-recovery. I mean, SARS initially put on the table that they were going to increase taxes for the personal income taxpayers, which was abolished because of dividends tax and other areas that overcompensated, luckily. But again, even with that inflationary adjustment to the tax tables, is it enough? I think it's positive. We can't be ungrateful for little mercies. But if you look at the bigger scheme of things, for those extremely wealthy individuals, it really doesn't account for much.
But we're unlikely to see that kind of reprieve again, given the constant fallout from the war in the Middle East.
Yes, I think if we even just take the exchange rate fluctuations, Jeremy, and we're seeing how the markets are being turned upside down, I'm extremely concerned now. And for a number of reasons. I mean, Discovery Medical Aid is going up next month. With this whole war in the Middle East and oil prices, it will have a massive knock-on effect to everything and everyone. Inflation, food prices, you name it.
Tanya Tosen, thank you very much indeed. Tax and Remuneration Specialist at Tax Consulting South Africa.